Welcome to Sceeto's Modern Tape Reading Educational Series. In this video we're going to review MacDaddy, which measures order flow momentum in the electronic futures markets. MacDaddy measures changes in order flow momentum. MacDaddy only measures order flow off of futures markets. It doesn't measure any order flow from any equity markets. There are many different ways to use MacDaddy. You can use MacDaddy to identify the beginning of a trend. You can use MacDaddy to identify the end of a trend. And you can also use MacDaddy to help you time your entries. MacDaddy is a very consistent indicator. The reason that MacDaddy is a very effective indicator is because the very presence of automated trading activity has a direct effect on price. Changes in price, regardless of the market, are always a function of changes in supply and demand. In the electronic futures markets, changes in supply and demand are predicated upon changes in order flow. Changes in order flow are predicated on changes in automated trading activity. It is estimated that greater than 70% of all trades in the electronic futures markets are created by and executed by software algorithms. In today's markets, automated trading is rampant. In electronic futures markets, there are ongoing series of trading events that continually affect price. These events are completely managed by computer software and hardware, and are frequently referred to as automated trading, program trading, high-frequency trading, quant trading, and algorithmic trading. You can think of changes in price as a process which is kicked off by the initiation of these automated trading activities. Any new automated trading activity in the electronic futures market will manifest itself as order flow on the Globex servers in Chicago. This order flow will physically alter the balance of supply and demand of futures contracts. When this occurs, we can quantify the change in order flow momentum. When there is a change in order flow momentum, there will be an effective change in price. After a change in price, you will see a change in a momentum indicator. Momentum indicators update after there is a change in price. They tend to be very late, and they're known as lagging indicators. Whereas MacDaddy is known as a leading indicator because it will elicit signals prior to the change in price. Let's review 5 easy ways to apply and use MacDaddy. One ready application of MacDaddy is to look for counter-trend spikes that allow you to enter in the direction of an existing trend. A counter-trend spike in an up move would be a red down spike. Each down spike upon a conclusion offers you a ready entry into an existing trend. Another handy use of MacDaddy is to give an indication whether a trend will remain intact. If you see higher highs in price, and these are accompanied by higher highs in MacDaddy, this indicates that the trend will stay intact. Here we see a high in MacDaddy in price, a higher high in MacDaddy in price, and the trend moves on. Here we see a higher high in price and a higher high in MacDaddy, and the trend continues on. Conversely, MacDaddy will give you a strong indication whether a trend may be concluding. If you see higher highs in price, and this is accompanied by lower highs in MacDaddy, this may indicate that the trend may be ending. Here we see price moving up, but MacDaddy moving down, and of course the trend moves down. And as the trend moves down, we see lower lows in MacDaddy, and price follows. Another use of MacDaddy is to look under the hood of the market, where you can now see substantive and quick shifts from heavy selling to heavy buying. When you see this type of activity, you know that the mass and intention of the algorithmic trading activity is on in earnest, and that the presence of this substantive algorithmic trading activity will likely move the market. This approach also works vice versa, when there's substantive buying and a quick shift to selling, and the market moves down. From buying quickly to selling, and the market moves down. Finally, MacDaddy will give you a pre-indication of substantive moves before the move itself. For instance, in a new up move, after a new low is put in, you may see steady and strong buying. In this example, you see consistent buying as shown in a steady green histogram, where price moves sideways for many hours prior to a big move up. Conversely, in a new move down, you'll frequently see a MacDaddy sell surge right after a new high is put in. Here we see massive selling, and then a tremendous move down. For more information on MacDaddy and our other amazing algorithms, visit www.sceeto.com.